Yo guys, what is good? I hope you're all doing absolutely amazing and are trading safely in the markets. It's your boy VGOK, and yes, I'm finally back with another video for you guys today. Now today's video is going to be a case study breakdown video, so I'm going to be going over a trade that we actually placed live on our mentorship call. It was about 2 weeks ago. This trade, it's an example of a Wyckoff re-accumulation style of trade, and in the end it achieved a 1 to 20 risk to reward ratio. Now, if catching these sorts of trades live with me is something that interests you and something that you're looking to get into, and having a close mentor essentially to help you out with your trading journey, then please do drop me a message on Instagram, and we'll have a conversation about what will be the best fit for your mentorship needs. But with all that being said, let's jump straight into the screenshots and the trading view breakdown of the video. So here we can see the before screenshot of basically the outline of the entry requirements. So we can see we've got a nice bullish manipulative reaction from this previous demand zone. We can see that it's manipulated nicely below these two wicks as the equal lows, and also there is a previous trendline liquidity below this this black line right in here. So you can see there's a nice manipulative move above, and we can see there's a clean area of imbalance for us to enter into, in keeping with that bullish momentum and that bullish bias. So entering within the imbalance of the sell to buy candle and having the stop loss below the original demand, keeping it at that safe stop loss level, essentially at the invalidation point. And as we look to have another look, this is the during screenshot. So at the time of the news, which was at 1:30 p.m, I believe it was the CPI news on that Wednesday, and we can see that it actually moved our trade further into profit by a considerable amount. So that was the during screenshot, and the after screenshot of where I looked to close off the rest of the trade which I had running, which was obviously held overnight and then closed the following day. Now the trade, it did look to continue going upwards after this, but we'll have a closer look into that in the next few minutes as we go into the trading view breakdown of this video. So here we can see the trade, and before we get started, I'm actually going to cut the price off right there so we don't lose our position, and I just want to have a look at the previous few days worth of price action on the hourly time frame. So from what we can see on previous few days price action is we've got this higher low creating a new higher high, so new uptrend created, new range essentially created, and we've got a few demand zones within there. So we've got this first sell to buy region with a clean imbalance, and we've also got this rally demand zone in here as well, which looks to break above all these structural points in here as well. So in terms of monitoring how price gets into the zone, we can see that price, it does come in fairly quickly, fairly aggressively into that first demand zone. So essentially normally we want to be seeing slow price action into our zones to then accumulate and go off in terms of a demand. But as you can see, it does look to respect that demand zone. It doesn't look to invalidate it by going below it. It stays within the zone, so essentially letting us know, indicating to us that this demand is actually valid. And we can see that it actually goes on to create a new higher high, breaking above this key structural point right in here. We can see in this downtrend right in here, this retracement move, that we've got highs, lows, lower highs, lower lows, lower highs and lower lows, and this being the last significant lower high before the lower low was created over here. And we can see that within that move, in terms of the rejection from this demand, it broke structure above, so the bullish bias was confirmed. Now as we go into lower time frames and actually see what I was waiting for in terms of movements into discount again to grab the buys, is obviously failing to get in on anywhere over here. I did spot there an area of equal lows within here, and we do have a nice sell to buy manipulation region in here with a clean imbalance, and we can see the obvious manipulation in those 3 consecutive down candles before the strong move to the upside which broke the structure. So I was expecting a move maybe into there, seeing the good reaction and then going for our buys. But as we have a closer look at what actually happened, and as we see price develop, from this point here we actually get a new higher high created, and essentially it's relatively equal highs. So we do have an area of liquidity over there, and essentially we've got this higher low and higher high acting as the last significant points within that trend. We then see a strong buy to sell move, essentially looking like it's manipulating these equal highs. But as we see and have a closer look, the major structure point being over here wasn't actually broken to the downside. Yes, these minor pieces of structure over here were broken, but the major structure point over here wasn't broken. It was essentially, as we have a closer look, we can actually see that it was a sharp movement down and then an even sharper move to the upside again. So essentially this low here was manipulated, it wasn't broken or anything, and the bullish bias was sort of sustained and confirmed in that moment there. We can then also see a good mitigation in this area within this order block, and essentially that area was continued to be respected in that moment there. Now as we look into the 1 minute time frame, we can actually see, you know, the build up of this trend line liquidity. So 1, 2, 3, 4 touches of the trend line, so therefore basically having a pool of liquidity below the trend line. So we know that price wants to dip below the trend line to either take liquidity out and continue moving bearish, which we'll go into in a second, or it was looking to manipulate the trend line. So we had a good order block in here, nice sell to buy order block, and then it goes on to break structure over here in terms of that move, mitigates over here, and then it continues with that bullish movement to the upside right in there. So we can see, you know, from the bottom of that demand to basically the start of that sell to buy bit in there, that's going to be the main demand. So in this scenario, I've got two sort of scenarios I'm waiting to see if they happen. So either we break below the demand and break structure to the downside, and essentially we'll be waiting for a movement back up into premium price to wait for a redistribution so we can look to catch the sells to the downside like so, or we're waiting to see basically a strong move to the downside into the demand, and we're basically waiting to see the validity of this demand being proved to us. And the only way we can see that is if we get a sharp movement to the upside, breaking structure, and then we go for the buys within there and capitalize on the bullish bias like so. So they were the two scenarios which we'll be waiting for, and as we see how price develops, we'll be able to see exactly what happens now. So price drops into the demand zone right in there, and we can start to see it's giving a good rejection up. But of course, for this to be valid, we need to see a strong break to the upside, confirming that bullish move. So right here above this red line, if we can close above that area, if we can break above that area, then that will be classed as a good break of structure. It's good rejection from this demand zone as well, and if we can do that, then the bullish bias is confirmed and we can look for our entries. Now as we see how price develops after that, we can see price does break to the upside very nicely, and we've basically got our entry criteria set. So stop loss below the original demand, having a safe stop loss at that level, and the entry within the imbalance of that sell to buy move that we can see right in there. So entry was set out nicely in there, and stop loss over here, and the TP we'll have a look at later on as well. And of course, knowing that we've got a news event coming at 1:30 PM for the CPI news, we know that we're expecting some degree of volatility at this time right in here. So keeping in mind that, you know, ideally if we can get an entry beforehand, before this news hits, you know, before spreads go a bit crazy, then that should be ideal. Now let's see what happens. So price comes, although very quickly, into the zone. We can see in the next few candles it does consolidate a bit, it does slow down, and essentially giving more validity to this buy position right in here. So as we see what happens, and in the run up to the CPI news release at 1:30, we'll see what happens. And we can see, there we go. So with the news, we can see that price has nicely rejected our entry area and is going further into profit, which was really good to see. In the space of about 2 minutes, or 1 or 2 minutes after the news, we had already achieved a 1 to 10 risk to reward, which is where I took a large chunk of partials off the table, moved the risk up to keep it a risk-free trade, and basically looking to monitor how price develops. Now as we start to see how price will develop over the next few candles and obviously overnight. We can see obviously towards the end of London session, London close is what we're approaching very soon, and we can see that price does continue to essentially keep reaccumulating to the upside. We've got a trendline liquidity starting to form. We've got a demand zone over here which is starting to form as well, and essentially as we see how it reacts from there, good reaction from the demand zone right in there, and price is ready to keep going to the upside and reaccumulating to our main target at 1.10250 roughly for that 1 to 20 risk to reward. Now as we see how price develops over the next day, and we'll exit out of the replay mode now, we can see how price eventually hits the 1 to 20 risk to reward in the next day's price. And also as we have a closer look at that reaccumulation, or the second reaccumulation I should say, within here we've got a nice imbalanced area within there that's been left open, and as we see what taps into that, it's the following day's London price action, London open price action, which taps into it and continues the bullish move to the upside. So yeah, the reaccumulation was definitely confirmed to go even higher. And as we zoom back out and see it, obviously it looks to get up to the next major supply zone over here or just below that. So it actually went on to create about a 1 to 31 risk to reward ratio. However, at 1 to 20 I was pretty happy with the profits that we achieved, and was happy to call it a day there after banking a lot of those profits. So there we have that full breakdown of that Euro USD reaccumulation style of trade, which in the end gave us the max risk to reward of 1 to 20, which was absolutely amazing. Now obviously if you guys learned something from this video and found that you basically took some value from it, then please do give it a like, share it with your other fellow traders and friends, and you know, obviously if you're new around here, then please do hit that subscribe button too as well. It really does mean a lot. But with all that being said, thank you guys so much for watching. I really do appreciate it, and I'll catch you guys in the next video for more of that trading source.